Progress in the United States debt ceiling talks encouraged the rally on Wall Street for 2 days in a row. Investors are taking a breather buying shares of the U.S. regional banks. Oddly, the market neglected hawkish comments of the Fed's policymakers. On a Friday, the stock market is poised to open on an optimistic note. The question is whether the momentum could last for long. Thursday was a lucky day on Wall Street, and the benchmark stock indexes extended the 2-day rally and locked in new highs. The Dow Jones added 155 points or 0.34%. The Nasdaq displayed the strongest performance and climbed by 1.51%. The S&P 500 closed 0.94% up at 4,198 points. The major stock indexes traded higher in the New York pre-market. The S&P 500 is expected to trade in the intraday corridor between 4,170 and 4,240 points. Stock investors cheered the prospects of the pending deal on raising the U.S. debt ceiling. Optimism in Wall Street was also encouraged by a rosy forecast from Walmart. The S&P 500 rebounded after an earlier drop. The index found support from the news that Republican House Speaker Kevin McCarthy said that the highly anticipated deal could be settled by the time of voting in the House of Representatives next week. Walmart shares jumped by 1.30% as the retail giant reported higher than expected profit in the first quarter and upgraded its sales and revenue forecast for 2023. The burning issue of the debt ceiling overshadowed uncertainty in the Fed's stance on further policy moves. The member of U.S. initial unemployment claims contracted more than expected last week. It prices that the labor market remains tense. Thus, inflation could persist for longer. The recent economic data indicates a slowdown in the U.S. economy after a series of rate hikes. Oddly, the market anticipated the first rate hikes by the year end, whereas comments by the Fed's policymakers suggest that they are not ready to lower or even suspend raising interest rates in the near future. Lori Logan and Philip Jefferson said yesterday that the economy was not losing momentum yet, to assure the central bank to suspend the cycle of rate hikes. Despite hawkish remarks from Fed's officials, shares sensitive to interest rates grew by 1.03%, driven by Synopsys shares, which surged by 8.65% in light of the company's revenue forecast for the second quarter. Netflix shares appreciated by 0.22% after the steamer had signed up almost 5 million customers for its ad-supported plan in emergence. Shares of a chip maker Micron Technology rose by 4.08% as the company plans to invest up to $3.7 billion in Japan in a new facility over the next few years. Shares of Take-Two jumped by 11.69%, beating estimates for quarterly sales. On a Friday, U.S. stock index futures remained strong and optimistic that a deal could be reached over the weekend to avoid a catastrophic default. S&P 500 futures reached a 15-week high in early trading, while the Nasdaq broke through levels not seen in 9 months. The S&P 500 is up 1.8% this week, its best performance since the end of March. Joe Biden's Democratic negotiators told the president on Friday they are making steady progress in the talks with the Republicans, echoing Republican Kevin McCarthy's statement. Despite the optimism about the debt ceiling agreement, investors should beware of an uncertainty about what the agreement will entail and its implication for the U.S. economy. Republican lawmakers are pushing for massive spending cuts as the fastest cycle of rate hikes in decades is still taking its toll on the economy. While their demands are being discussed, the deal risks last-minute opposition from the hardliner House of Representatives that insist on a significant spending cuts. In one estimate earlier in May, the Senate Budget Committee was told that U.S. GDP growth would be 1.61% in 2024 if Republicans put forward their demands for spending cuts, weaker than at 2.23% in the earlier forecast, leading to job cuts by 790,000 people. In addition to optimism about the ceiling of the U.S. national debt, today the key U.S. stock indexes are waiting for another test. The chorus of Fed speakers this week who were almost anonymous about the fact that inflation has turned out to be more resilient will be complemented today by Fed Chairman Jerome Powell. The Fed leader will speak at the Economic Forum later today. A panel discussion will be monitored for any further clues on the course of the U.S. monetary policy. Former Chairman Ben Bernanke will take part in it. In the corporate sector, U.S. regional bank shares rose by 8.5%, posting the biggest weekly gain since January 2022, boosted by strong growth in Western Alliance deposits after a two-week sharp fall. Shares of Walt Disney fell 0.6% in pre-market trading. Contributing to the fall was the news that the company would be pulling shows from its streaming service, as well as scrapping plans to build a nearly $1 billion corporate campus in Florida. On the back of waning default fears, the US dollar retreated from much highs and pulled back. Its index shed 0.25% in midday and returned to the levels of Thursday. The index settled at around 103.3, and the intraday corridor is in between the same border of 102.7 and 103.7. Having skidded by 0.2% intraday, the US dollar index has advanced by 2.5% in the last 2 weeks because investors decided to revise their expectations on the Fed's agenda. The messages from the Fed were really hawkish. The traditional divergence of market expectations of rate cuts and clear signals that the Fed is not considering this agenda in the near future and may affect the currency market and the dollar index. Default fear has effectively drowned out economic signals, so the market will return to the traditional macro-based forecasts. The US dollar index may receive extra support. As for expectations of a rate hike in June, they have risen significantly over the past week. The market estimates the probability at 40% compared to 15% a week ago. Currently, traders believe US interest rates will decrease to around 4.86% by the end of the year, compared with the expectations of a falling to 4.25% just 2 weeks ago. With the no US default betting and persistent inflationary pressure, traders now estimate a rate cut by 45 basis points by the year end, compared to 55 basis points on early Thursday. Today's speech by Jerome Powell will be of great importance for the dollar index and market sentiment. He was quite reserved after the last meeting, but today the Fed chair will have more relevant data in his hands. The Canadian dollar had bad luck yesterday, and today its advance is driven by oil prices. At the same time, the Lunis rally is capped, having edged down by 0.07%. The USD card pair dipped to 1.3490. The instrument is likely to trade in the intraday corridor between 1.3460 and 1.3520. The Canadian dollar weakened against the US dollar on Thursday as the oil prices fell, and Bank of Canada Governor Tiff Macklem did not dispel market expectations for another rate hike by the central bank. Macklem suggested that April's rise in inflation, the first in 10 months, was abnormal, and said consumer prices would continue to decline in comments following the release of the Bank of Canada's Financial System report. Earlier, the Bank of Canada said it was worried about households' ability to repay their debts and was seeing signs of financial stress on some homebuyers. Prior to Macklem's speech, markets saw an 80% chance of a rate hike in July. Then this figure fell to 60%. The prospect of maintaining the key rate at the current level had a detrimental effect on the loonie, but today it found support from growing oil prices and the soft US dollar. Brent crude futures rose by 1.2% to $76.77 a barrel. US WTI added 0.9% to trade at $72.50 a barrel. As for the cryptocurrency market, there is a relative lull and mixed sentiment on key assets today. After another spike and plunge, Bitcoin recovered by 0.7% on Friday to a level of $26,900. Top altcoins traded with mixed dynamics. Ethereum, Solana, Ripple and Litecoin added from 0.4 to 2.3%. Binance and Cardano lost 0.2 and 0.7%, despite easing fears about the banking sector and the US default and the significant growth of the US dollar index. Bitcoin is unwilling to give up, so it has good stock within the range of $26,500 to $27,500. There is a little news. Hence, the crypto market today and traders are more likely to listen to Powell's speech than to respond to industry events. At the same time, the Bitcoin 2023 conference started this week in Miami Beach with a much lower audience compared to previous years. The atmosphere at the conference was more subdued due to the recent decline in digital assets and various cryptocurrency scandals, resulting in empty seats and a less vibrant atmosphere. At the same time, MicroBT, a leading manufacturer of Bitcoin mining equipment, introduced 3 new mining rigs at the conference, including one that is currently the most powerful in the market. And this year's event featured well-known speakers such as the writer Michael Lewis and US presidential candidate Robert Kennedy. The outlook for Bitcoin has changed a little. The asset is still facing strong resistance at $26,500 and $27,500. If Bitcoin manages to break above these borders, it could target the 28,000 high or retest $26,200. And that's all for today. We wish you a successful ending of this trading week. Our analysts continue to monitor the financial market situation in order to always provide you with the latest information. Subscribe to our channel. Have a nice weekend and see you on Monday.